We're going to do a video on the EURUSD with technical analysis. That's the euro versus the dollar. We've got a daily chart here of the dollar, the euro versus the dollar with the 200-day moving average in blue. You can see we had a great rally. It's come up here. We're above the 20-day moving average. We're above the 5-day moving average in green, and we're right there flirting with the blue 200-day moving average. This technically still, I would call it this not in a bear or bull market, but right against fighting against the blue 200-day moving average. We're going to show you a weekly chart, an hourly chart, and then some algorithmically generated entry prices from RBAM research, and you show you how to get those at the very end for free. Let me just give you a quick picture of this chart with the weekly. This is the 200-week moving average in blue. We're above the 20-week in red and above the 5-week in green. What we're going to do here is come in and cut out one of these moving averages and add a linear regression in here to give us a better idea of what's going on with this currency. And this is a 100 bar. So on this chart, a 200-week linear regression of this. You can see it's respected it pretty well. This second, the middle line is fair value. The second, or the first line out here is a 2 standard deviation bar. This is a 2 standard deviation bar to the bottom, and the middle again is fair value. You can see it's respecting it, so we have to look at it. It's respected it to the downside, roughly respected it here, definitely respected it here, and now I'm expecting it to respect it here. So what does that mean? It means it's overbought on a weekly chart, and I expect it to sell down to at least fair value probably within the next 2 weeks. So I'm looking at 0.99 within the next 2 weeks, in my opinion, for entertainment purposes only on a weekly chart. So overbought on a weekly chart. Let's take a look what it says on the daily. We take a look at the daily chart. Again, 100 bar regression analysis, 2 standard deviations above and below, fair value here, overbought. So it looks like there's a very high probability, for entertainment purposes only, all my opinion, very high probability that this rally to the 200-day moving average in the euro versus the dollar is going to fail, and we're going to come back down probably at least to 1.01. That's my best guess for right this second, but to come down and test 1.01 and maybe even down here to fair value of 0.99. But on a daily, 0.101. On a longer term, on the weekly, we said 0.99. So that's what we're doing for the weekly and the daily. Let's check the hourly. Again, we've regressed it. We can see reasonable respect across the bottom, but definite respect at the top. It's sold off, and we're right around fair value, just below fair value on an hourly. But again, we could expect a sell-off down here Friday or Monday to the 103 level, and then eventually this is going to rotate, and we're probably going to get down to testing this 200 hour moving average in blue down here. I expect this doesn't look overbought in an hourly, and especially because it's come across, it's getting rid of its tiny little runaway here, and this of course was two standard deviations, so we were due for a sell-off back to fair value, and we got it. So we may get a rally first and then on an hourly basis and then a decline down, but I do expect to get that decline down that I mentioned earlier. Let's take a look at the EURUSD down here for RBAM research and see what RBAM says about it. We put out algorithmically generated entry prices for the major forex pairs every morning before 7 a.m. Here's for tomorrow, Friday the 25th, and we've got buys at 1.04. So that's looking for a rally, and if it does rally, it's not looking, but if it does rally, it's not predictive. If it does rally, it's saying these might be a good place to buy for entertainment purposes only. You trade at your own risk, and you can't use our entry prices for anything other than entertainment, including my commentary as well. You should always do your own analysis. 1, 2, 5, 10, and 20-day holds. Buys 104, 104, 103, 104, and 103 across the board for tomorrow, the day after Thanksgiving. You can get access to all of these, so you can check them out at your own leisure at rbamresearch.com. No credit card required. 14-day free access. Follow the link in the description below to RBAM Research. Put in your email address and get instant access before 7 a.m. to 190 algorithmically generated prices for stocks, the major forex pairs, and the most liquid futures contracts. Again, all for entertainment purposes only. If you like this video, please click the like button. If you want to subscribe, please do that as well. And if you have a great comment, we'd love to hear it in the comment section below.